Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis update of commodities. We'll take a look at the dollar, yields, precious metals, and commodities and ETFs that I follow. And I'll give you my financial opinion on those sectors. If you guys need any help with anything, definitely check out finding-value.com, become a platinum member. You can use the word discount in the coupon code to get a discount if you wish. And we'll dive right into this. And a reminder, we have a platinum question and answer session at 7 a.m. Mountain Standard Time tomorrow, which is Saturday. So we'll see you there if you're a platinum member. And we'll dive right in. So we've got the DXY here. It has had a monster day today, up 1.2% on the currency. And I do think that that is tied to the yields. So looking at the yields, the 10-year yield, it is a monster up day, 4% up on yields. That is huge movement for yields there. I've talked about this before, that yields could potentially head higher. And let's see if we can see any patterns here. You know, I could maybe throw a pattern that looks something like this, where we're kind of coming to some sort of wedge type pattern. Maybe we break out of it. Maybe this is the three humps that are starting to work its way out. I don't exactly know yet, but that's what I'm seeing in it. And with a stronger dollar and higher yields like this, the overall markets did not like that type of trading. Bond prices obviously lower with yields higher, so bond prices are lower. And the 30-year yield was also high, not as high as the 10-year. So we had an inverted yield curve. The curve is inverting more. And then we've got TYX, and I'm trying to figure out if there's a pattern on this guy as well. You could maybe run it through here very similarly, and maybe draw something like that, or maybe put it on the line like that, which is a continuation pattern which entered from the bottom side up, depending on what this looks like, where we could be in a gigantic pattern where we actually break to the upside. So again, I don't know what this is going to look like yet. We still need more data. We still need to get a little bit more data points out there and see what this thing looks like. But if rates continue higher, which is a possibility, people are dumping bonds, or they're having problems with the demand for bonds. And with increasing interest rates, it can definitely take down or slow down any sort of progress in the markets that are interest rate dependent or interest rate sensitive. The TYX TNX ratio, so this looks at the curve and how it's normalizing and or inverting. And we have a massive inversion here this past day today. Stronger dollar and massive inversion of the curve with higher yields. Gold does not like that. Does not like that at all. Actually, I would say much of everything in the markets didn't like today. CRB index down 2%. We are still above the trend line. We could be doing a full retest, but that's what it looks like for commodities. Could this be a false breakout where we actually break on down? We'll have to wait and see. We've got CRB to S&P 500, which is also down a little bit, which means commodities went down a little bit more than the S&P 500. A lot of the times when you see this, you'll see a big run up like this. You'll get a double top. This ratio mimics what Bitcoin and Ethereum did. So it comes on up. Your biggest leg is the leg after this double top. So it kind of comes down in three distinct waves. And then you get usually kind of some sort of lead-in pattern like that, and then it goes up. I'll leave that in there, and I don't know if I drew it in. It might be shifted downward a little bit more, but that's kind of the pattern that you'll see. Looking at gold down 2.44%, down $46. That deals with the rates going up and the dollar going up like it did. This is kind of a longer-term view of gold, and we were ready to break out here. And now it looks like they're pulling all the stops, whoever it is, trying to stop this move. And gold is kind of the precursor to where all of the other commodities are going to go. So someone is defending that gold does not go higher because with gold going higher, it basically drags everything up with it. So if you can control gold, which is kind of like the barometer of money in the system, then you can control all of the commodities. And that's why when you look at a lot of the precious metals, the most heavily shorted ones are gold, silver, and platinum because they're precious metals. And they need to be basically kept on their cost curves, so to speak. At least that's what's happened over all these years. But anyway, we've got a large selling pressure past couple of days in gold. We could see further downside in precious metals in general after we look at these other ones. Very strong selling pressure the past 2 days. It is correlated to the DXY going up and the yields going up quite dramatically. Gold does not like yields going higher because the yields going higher with a falling interest rate means you have a less real negative rate, put it that way. Silver also got punished. Massive down selling pressure day. The reversal day was yesterday, and then we're getting sold off today. That could extend to further downside if these buyers, especially what we saw today, continue in kind of like panic selling mode almost. Platinum also getting sold off. Hopefully this gets a little bit lower. I will be another big time buyer in platinum if it were to get down any lower. I've been eyeing it even where it is, but I'm surprised at the selling pressure that we see today. This is the green army showing up. The buyers coming in to push this higher, and then the sellers are definitely responding. But I would definitely be a buyer somewhere very soon, maybe even now. We'll see what I decide in platinum. XE to go ratio, that is also falling. You can see, I'm trying to see if there's any type of trend line here. It looks like we've broken to the downside there, and it's not really contracting though. But we broke to the downside there in the short term, so we could see a little bit of selling pressure in the gold and silver mining companies. GDX heading a little bit lower. Yesterday was that transition day. We had a large selling pressure day, which is a bearish engulfing, and it was followed by selling pressure. Still above the blue support line. That support line is right in there. Gold, looking at gold, and I wanted to make a comment here. If you're a girl watching, this is what it feels like to get kicked in the nuts if you're a guy. I mean, it doesn't matter to me. I'm going to buy whenever this pulls back for a variety of different things. So I win if it pulls back. I win if it goes up, is the way that I kind of view it. SILJ also getting sold off. Your reversal day yesterday, that's a bearish piercing pattern that came back down today. Momentum is strong. It's to the downside, so we could see further downside pressure in silver, or I should say in SILJ. Crude oil also getting sold off today. So we're breaking below that trend line, and maybe we come back to the bottom of the support level. That is at $68-ish. So we'll see if that goes down. Lots of the time, it can also come back to here, which is about 71. So 71 or 68 is what I would be looking for. We have seen some strong selling pressure on this side, and we could see further downside if the selling pressure, we'll say, accelerates. Natural gas down 2.4%. I do not see a clear bottom here. The green army has not shown up, and this is definitely all red army. So I would be waiting patiently to see where this thing bottoms out at. XOP, obviously this didn't fare as bad as the overall crude oil and natural gas commodity markets, as the overall commodities themselves. But we were down a little bit today, and it's just kind of sitting there, down 0.45%. Broken down trend line, and we're just sitting there. This is a higher low, so we'll see if that sticks. If it goes into this, we're in an uptrend again. OIH, I think it's one of the lonely green sectors. Slightly up 0.55%. Everything else is getting decimated. We do have a couple of bearish engulfings here, which, we've got a bullish engulfing here and here. So the buyers and sellers they're fighting here back and forth. That is for sure. Sprott Physical Uranium Trust also getting a little bit of diarrhea. That diarrhea to the downside today. There's your bearish engulfing at the top here, saying we could see a selling pressure day. And this has also been going back and forth. We're at that support or I should say at that resistance line of 1818 or so. We want to close above that. But it still looks good though. We have kind of a support level there. It's a higher low. We'll see if this continues higher over time, which is stepping into that resistance level. URNM also getting the diarrhea. It's exploding to the downside, explosive diarrhea. But we came out above. We had a nice, good setup here. Bullish engulfing here. We had it on everything. And what makes me kind of weary or curious on this is it's like we had positive signals across the board of uranium and all these different things. And the yields spiking here have reversed us in the short term. So we're back within the pattern. Maybe we come back in this general area where I've got it circled. And maybe as long as we keep pressing these lows higher and higher and higher, wherever it ends up coming, what that's going to do is just give us another really good buying opportunity if uranium can pull back in this general, we'll call it this pocket back there. Looking at tan still messing with that trend line. So that trend line's right there. We're going to break and move on up. That is looking fantastic. We just haven't broken out yet. We're still trying to do that. Higher lows, everything coming up into it. We've got COPX. This is the copper ETF. That's also down with, I think, just about everything. It looks fantastic from a long-term perspective on the monthly candlesticks. We got these little bloody noses, which is a stair-step pattern, looking very good. It's tall green guys with a little bloody nose is what I call it. It's a continuation upward pattern. But we do have a little bit more selling pressure here. It is looking like it's getting a little bit out of control to some extent. You can kind of see these little breakouts that we've had, and maybe we have another kind of consolidation here sideways before breaking higher, just like these other ones of this stair-stepping pattern. And that's what I mean by stair-step. They look like stairs as you step on them. Lithium down today, just like everything else. It's not really a reversal candlestick, just a down day. REMX is also down day. We were basically breaking out of this. You have to keep in mind, guys, what we're looking at, if these break to the upside, these are all inflationary. And the Federal Reserve doesn't want inflation. So you have to keep in mind, maybe they're doing something, because this here, every single sector lined this up for a nice move higher. And out of nowhere, we see these gigantic moves coming to the downside of a lot of these areas. And I do think it is interest rate related, and I think it is precious metals related and all that. So there could be something else going on behind the scenes. SPX also getting it hit in the face a little bit today. And it's not a reversal candlestick. Everything still looks strong. It's just a down day. Same thing with the US composite or NASDAQ index. It's just getting kicked in the face with interest rates and a higher dollar. EEM following the same path as everything else, down a little bit. Remember the patterns that these usually create. Usually you create a pattern, it goes sideways, comes up, it comes back down to that, and then you head up. This is a lead-in pattern for a much larger move. So there could be a little bit more downside in the short term, but I'm going to use that as buying opportunities for myself. XHB, small down day. This really actually looks very strong to the upside, but just a regular down day today. Buyers came in, made it a little green day too, so momentum's heading higher. Moo's also selling off a little bit. Doesn't look too bad, above support. Everything looks good. We've got copper selling off. We could get down to this level, back to support, do kind of like a retest, like a breakout and a bounce or a retest. We've had a massive move in copper from about $3 to $4. So, I mean, seeing a pullback is not really that unheard of with a move that large. Lumber also in an uptrend, but having a down day today. Falling wedge, breaking out, looks good to continue higher over time. Iron ore down a little bit, 1.88%. The pattern doesn't actually work. I don't know why it's not updating on this one, but it was down a little bit. Nickel down a little bit. We could see a little bit more of a downward move in some of these. So when I see nickel, we can see that we came up to a point here. We consolidated. Sometimes we come up and then we get another kind of pullback. Maybe we come back and do a retest of that, which is a possibility. Aluminum slightly lower, still looks good. On a bigger time frame, we've got a gigantic inverted head and shoulders. We've broken out, and it's kind of just moving sideways. Is this a small little, spot where we could head lower before heading higher? It's possible. Baltic Dry Index also heading lower. I still am a bull on the Baltic Dry Index in general. We had a falling wedge pattern setting up. And what makes this kind of interesting, guys, is we've got really good setups across the board here. And in order to keep these things down, they're going to have to really push on the interest rates and the dollar and all this stuff to kind of hold it all down or together. But this is also a bullish pattern that usually breaks to the upside. Almost every pattern I've seen in all of these commodities have bullish patterns wanting to break to the upside. So the markets are aligning these things to go higher. Now, natural gas and coal, they're obviously going lower. Those weren't lined up, or maybe they were trying to line them up, but that is definitely lower. And we've got Ethereum, which is slightly higher. We can go back to the candles here. It looks like it's breaking to the upside, and same with Bitcoin. Bitcoin's still holding on pretty good, given the selling pressure that was across the board. So today, a lot more selling pressure. Again, I'm not a market mover by any means. The markets are going to do what they're going to do, and we just have to flow with it. We got to roll with it. If they're going to give me better buying opportunities, I'm going to use those as buying opportunities. The market conditions have not changed. They're still good. And I know I see some people, they're worried about recession. Could we get a pullback? It is possible. There's nothing saying that we can't have a recession or a pullback or whatever, but I don't think that the reasons that most people cite are necessarily valid reasons. Just because interest rates go up does not mean that you will 100% have a recession immediately. So it may be a year or two out. It may be immediately. And a lot of people, they try to predict these things, and I would say the majority of them do not get it right. They always get the timing wrong. So if the pressures, the structural pressures in the system exist for higher prices of commodities because of supply shortages out in the future, what that does is it limits what the Federal Reserve can do. If they have interest rates that are too low, and they're trying to tread this line, I understand that. If interest rates are too low, the housing market takes off and you get inflation from the housing market. If interest rates are too high, the housing market hurts, gets hurt, it gets held down, so to speak. If you continue to raise, there could be bankruptcies with businesses or whatever. Basically, the garbage in the system needs to get removed from the system. But they also have to make interest payments on the debt, and the debt has to roll over, and your interest payments go up. That would also be inflationary if it leads to deficit spending. But that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you guys are interested in how I'm playing all this. And yeah, we just had a big down day today. Hopefully you guys are doing all right. Hopefully you're having a good day. And we'll catch you next time. This is Finding Value.